to you. Every single trader has to understand that this is important pre-trade. What do you do? What should you not do? What do you need to know? The lesson of the day is going to be what is the most important part of your process when you're actually making a trade. So when you think about what is a trade, okay, a trade is essentially a bet that the market or whatever it is that you're going to execute on is going to go up or down. It's going to go from price X to price Y before it stops you out. But in order to get to that point, you've got to ask yourself a few questions, and you better have those answers before you actually get into the trade. This is really important because ultimately what this boils down to is how to limit your losses when you're wrong, how to make sure the market doesn't run you over, how to make sure that you do not revenge trade, how to ensure that you do not blow up your account. Because if you don't answer some simple questions before you get into a trade, you're going to be susceptible to all of those things. And a lot of experience in watching other traders throughout their journeys has taught me this time and time again. So what is a trade? A trade, we talked about if-then statements. It is, when it boils down to this, I need a reason to want to trade something. So whatever that might be, it could be a stock on earnings. It could be the futures because of an economic number. It could be Rivian because I happen to like Rivian and the EV names. I need a reason to like a certain direction. Maybe that's a trend. Maybe that's a piece of news. Maybe it's a price action off of a key price level. I then need a reason or method of executing into position. I need to see it bounce off of VWAP. I want to see buyers above a certain price. I want to see sellers below a certain price. I need to decide, and this is the most important part, what does it mean to be wrong on this trade? Is it a hard stop where it breaks a certain price level? Is it some kind of a moving average breaks and I get out? Is it if the futures, the NASDAQ breaks a certain level, I get out of this trade? Am I trading Is it Bitcoin breaks a certain price and I get out of this trade? Is there a trend indicator I'm following that will cause me to get out of this trade? Is it something I'm looking on level 2 that will cause me to get out of this trade? If the answer to that is you don't have it until after you get in, you're in a world of hurt. Because you know what's going to happen to you. If you don't have an out before you get into a trade and it works, you're not going to have an out the next time. And then what's going to happen is when you are wrong, you're going to be wrong for a heck of a lot more than what you are making when you are right. So you've got to be able to answer that question. And then the last question that you should ask yourself is, okay, well, what are some reasonable targets? Like, where can this stock get to? And in practice, it should look something a little bit like this. So I'm going to come to Rivian because it just happens to be something I'm trading right now. And so whether or not you have a specific reason other than the stock is generally trending down on a daily chart or yesterday it was super red, so I'm looking for short entries. So like that's the first step. I'm looking for shorts because the stock was incredibly red. Okay, that's answer number one. The second question is, what is the thing that is going to make me execute into a short? So you can see right here, yesterday's close right around 1540 to 1550. It closed at 40s. In the aftermarket, you can see it crest out at 1550. That was also a key price level at the open. It failed 1550 at the open. So I want to base this off of 1550. So the way I look at it is, if weak under 1550, I want to short it. So I want to look shorts when there is weakness in sellers underneath 1550. So at the open, it bounces, it then breaks the level briefly before coming back up. So it's under 1550 here, but it immediately comes back under. Then it holds lower highs, breaking down. That's the weakness I'm looking for. Weakness under 1550, enter the trade. I want to make sure I know what's going to be my exit point. So initially, I'm simply getting out right here, really tight stop. I want to get out in front of that previous support level at 1555. Once it makes the same low instead of a lower low, I'm going to tighten up my stop. I'm like, okay, that's not making lower lows anymore. I'm refreshing it, but I'm going to tighten my stop up to where I got in that 50 breakdown. So that's an adjustment. Once that trade is done, I go right back to the same statement. What am I looking for? Weakness underneath 1550. Does it show me the weakness? Yes, it does. Enter back into that trade underneath 1550, stop to the local high, maybe you go stop to VWAP. I have targets in mind because it's already shown me a range. Now, each time I'm setting a hard stop and I'm going to adhere to it when it breaks. And that's sort of one of the keys. If you don't have a reason to get out, then you're just going to look for reasons to hold it or add to it. It's easy. If you like a trade in a certain direction and it's generally going in that way, you can see all the reasons in the world to add to it if you don't have an out. Now, if I had an out that's higher and I wanted to be selling in this range up there, that's great. That can be part of your plan too. But if you want to have a tight stop, enter in front of it, get out if it does break. Because what you are trying to avoid, and I can't say this enough. What you are trying to avoid is a situation where the reason that you want to be in the trade is gone and you're still in it. You don't want that to happen to you. So I'll give you an example here of a trade that very clearly didn't work. It didn't work right away. And what happens if you don't have a plan of action? So Upstart, this is a stock that was down over 10%. I was looking for a bounce because it was short sell restricted. So what did I say my plan of action was? I wanted it to hold a higher low off an even dollar level breakdown. So what did it do? It flushes at the open. I'm looking for a turn. Okay, so there's a little bit of a bounce. Tries to take 27, fails 27. There is a wipeout bottom. It then holds a higher low right in here when I get the long. I jump into the long, looks strong. There's actually even a buyer at 27 the second time, so I add to it right at 27. But you know what? It never holds a higher low. So everything I was looking for in terms of an entry was there. I waited for the bounce. It made the wick bottom. The buyers emerged above the 27, the even dollar level. So that's what I was looking for. I pushed back into VWAP and then higher. But it rode my stop, and I got out. Now, here's the key thing. Why did I not get back into that trade? Because it didn't set it up again. The conditions I wanted, holding that even dollar level, making a higher low, buyers above that price, that didn't happen. So there's no getting back into the long off the low here because it didn't fit any of my requirements. Now, if I just like the long in Upstart on the dip buy, maybe I'm just buying it all the way down because I quote unquote like the long. But you've also got to have an execution plan. It's not enough to like a direction. It's not enough to think a stock or the market is a buy or a sell. You've got to have an execution plan that includes, why do I even want to be looking at this thing? Why do I even want to go a certain direction? What's the thing that's going to make me execute in? Buyers above a price, a breakout, bounce off support, higher low, technical indicator. I don't care. Any one of those things can be valid. What is wrong and what am I going to do when it happens? Is it a hard stop? Am I going to give it a couple of extra cents? Am I looking at an indicator? Is my out as well? All of those things, as long as you have yourself an out, and then you can start thinking about where you might take your profits. So if you can't answer those questions, then you shouldn't be getting into a trade. And I'll do you one more. When a trader is starting out, if you're a beginning trader and you're in your infancy of your trading journey, it's even more important, especially if you're in sim mode, to answer those questions honestly. Because a lot of people, when they get into sim, they're just, I'm just going to hit a bunch of keys. That's your chance to learn for free. So in that situation, you really want to make sure you're answering those questions before you get into trades. Practice like you are going to play. Put on tape of, you hear about it with all the greats. Put on tape of like a Kobe or whomever, anybody but Allen Iverson. When they're practicing, they're going to practice hard, as if it's a game situation. And in trading, you got to do the same thing. Every single trade should have those steps so that when you go to make a trade, you don't have to think about it. It's just part of your process. That's the real deal. Answer those questions before you make any trade, and that's going to save you a bunch of money and prevent you from blowing up your account.